It's not just the central banks. It's not just what the Federal Reserve is doing. There's shadow banking, there's private sector credit, there's collateral pools that exist that a lot of people wouldn't know existed unless they went and looked for it. And then in the rise of China, there's a significant amount of capital flows that have impacted liquidity.
To the Wiggin sessions. I'm Addison Wiggin. Today I have with me Garrett Baldwin, a renowned research economist and financial writer. Garrett holds degrees in economics, finance, and business from Hopkins, Purdue, and Indiana. He's been trading for a number of years, and with his extensive trading background, he's counseled and advised clients in 27 different countries on risk assessment. Today we're going to talk about a little bit about Garrett's background in journalism and his experience with the rise of bias in journalism, something that we talked about at dinner a couple of weeks ago when we were both at Rule Symposium in Boca Raton, and piqued my interest. So I wanted to talk a little bit more about that. And then we're going to get into some of his more recent writing on 4 trends that he thinks if you follow, they give you the best shot at making money over the next 10 years. Garrett, I'd like you to introduce yourself a little bit to talking about your past in journalism, because you have a front row seat to some of the more interesting events in the past 20 years, and you developed a sort of unique perspective on the rise of extreme bias in the media.
Absolutely. So thanks for having me in this. Great to see you again. You know, I worked on Wall Street for a number of years before the 2008 financial crisis. So I went to Northwestern University. I studied journalism there, was in the magazine journalism program, and I was a member of the investigative project called the Medill Innocence Project. That was the reason that I chose to pursue journalism over lacrosse, of all things, in college. I found that journalism is a little bit more competitive than lacrosse can be. But I ended up on Wall Street. I was working in consulting for a handful of years, and then the financial crisis happened. And I really, even though I had a deeper understanding of trading and understood, major macro events, I didn't have a deeper understanding of what was happening with derivatives, what was happening with a lot of the policy decisions that helped fuel this 2008 crisis. So I went back to graduate school and studied at Johns Hopkins University. I wrote my thesis on the 2008 crisis. Dug really, really deep into the monetary and fiscal policy and supply policies that helped kind of fuel that crisis. And then I was actually going to be going to Yale for business school, and I ended up magically, randomly doing an interview with Jim Rogers back in around 2011. And when I was interviewing Rogers, I knew that he had gone to Yale, and I asked him very point blank, would you go back to Wall Street? And he went on this wild rant about how farmers are going to be the richest people in America in 20 years and how they were going to be driving the Lamborghinis. And out of all things that happened, I wrote that story. I got a phone call from someone at Purdue and Indiana, and they told me that they had a dual program. You get a master's degree in agricultural economics, which is really trade economics, and then you get an MBA in finance or agribusiness. And it was half the price, and I didn't have to go live in Connecticut. So I jumped at that. And while I was doing that, I started working for Money Map Press. So I've been with Money Map for about 11 years. Moving into my 12th year right now. I'm effectively the executive publisher of the group. You might have seen me do a lot of other work with groups like Tasty Trade, Tasty Works. I've written for Modern Trader and a handful of other magazines doing more investigative style journalism. Over the years, my passion's really around finance and economics, and I spend a significant amount of time studying both academically and from just kind of journalistic curiosity. Three major anomalies in the market that I kind of build my strategies around, and those are momentum, insider activity, so what executives are doing with their money, and then kind of value-based and growth-based type strategies.
Let's go to your background in journalism from
Sure.
Northwestern, the Medill Innocence Project. And the reason I just want to kind of follow up from our conversation over dinner, because I found it fascinating that you were able to kind of pivot into the financial world from a very unique perspective on journalism. And then also, I'm just sort of interested in journalism as a field, just because it has it has changed so dramatically since we were younger, and with the advent and widespread use of social media, it has really skewed the way that we look at everything, including the financial markets. But one of the things I've noticed over time is that politics has seeped its way into the financial markets and economics in a way that wouldn't be possible if there was an extreme bias in journalism. And also, not just politics, but like economic theories that are not necessarily in the best interest of certainly the American middle class. And that's one of the things that I follow on the Wiggin sessions all the time is like, what do you do about it when gender bias becomes a part of your investment portfolio?
Sure.
There's a whole kind of bias that has seeped its way into the financial work that we do, but you had a unique perspective on kind of the social application of bias in journalism.
Yeah, I mean, you have to start, unfortunately, with politics. And a lot of people will look at what happened, for example, with Tom Cotton wrote an op-ed in the New York Times, I believe it was a year ago. And there was a big freak out within the base of the New York Times newsroom who didn't want to have that alternative view published in their paper. And the thing is, like, this collective freak out, this bias that we see, and there's a couple of different reasons why I think it exists, but it purely exists. And anyone who argues otherwise, I've lived in Washington. I've lived in DC. I experienced, the kind of fishbowl mentality of the people who operate within media in DC and how that kind of is structured. And then there's another element to this where a lot of talking points within the media are constructed, interestingly, by a lot of political advocacy groups that are based in the Washington area. So, you will see financial talking points written by the Center for American Progress or a company like DDC Advocacy. And ultimately what that does, those talking points spill out into media. There's a lot of op-eds that are written by people who didn't write them. There's a big ghostwriting phenomenon. But let me go back to the original part here. So my view on bias in the media was kind of my firsthand experience when I talked about the Tom Cotton thing a moment ago. 22 years ago, I was a freshman at Northwestern. And the year that I arrived in 2000, that was the year that was Bush v. Gore. So in November of 2000, they had an event at the Medill School of Journalism, and we were calling journalists around the country, and we were talking to the mayor of Boston. And it was it was like a newsroom. It was really wild, to see this as an 18, 19-year-old kid and see this is what it's like on election night. They were recreating that experience. But you couldn't help but notice that half the room was wearing Al Gore shirts. You couldn't help but notice that every time that they called a state for Gore, people were cheering, or when they called it for Bush, they were booing. And that started to I started to look around and I thought, wow, I am naive. That the fact that I thought this is the future of the media, this is the future journalists who are going to be investigating things. It's supposed to be neutral. It's just deliver the facts. That was not what has existed that night. And then when Bush won, I collectively watched about 120 people turn into toddlers and start screaming and bemoaning and writing these op-eds that were just so over the top about what was going to happen under Bush. And you see that because what happened with the New York Times, there was a young woman in a class behind me. I watched her put her fingers in her ear and sit on the ground and scream while having a debate with a friend of mine over a pretty mundane issue. And that is somebody who's in the New York Times newsroom right now. That attitude, what people are seeing in media now, I saw it 20 years ago. And if you look at what's happening, I talked to a dean of a journalism program not long ago, shortly after Trump was elected. I said, what are the essays like when people are applying to the journalism schools? And it was, I myself, as an individual at the age of 17, 18, I must save democracy. That view is starting young. It started young, and it's definitely perpetuated in the universities themselves. And I hate to say it, but I almost quit really quickly. When I was there, I almost just turned my head and just said, I'm going to go study economics. And, they have a great economics program. I had really great professors. I had really great journalism professors. I had Craig Vetter, I had Craig LeMay, I had a handful of other people, David Protest, people who really taught me journalism and ethics. But at the same time, I couldn't help but notice there was an extensive, maybe 10-1, 15-1 left versus right ratio. I was in the middle. I didn't care. It doesn't matter to me who's elected. I'm just trying to get by. I'm trying to, play the markets accordingly. It doesn't matter to me. It never has. I'm very individualistic. But certainly within the media, there is bias. Now, the second part of this, which is important, is there is in the 24-hour media world a desire to break the story first. And that is from the CNN culture that kind of came the 24-hour news cycle. What that has perpetuated is the desire to not be right, but be first. And when that happens, this is how you end up with these stories that people jump onto and they all latch onto it. So whether it's the Russia collusion story or it goes back to the Duke University case in 2007 that impacted a friend of mine, if it was the 2012 University of Virginia Rolling Stone story, if it was a hate crime that was faked at the university that I went to, and everyone jumps on it because there is a collective rush to demonize or to fit in with a perspective without ever saying, wait a minute, why don't we wait until the facts roll in? Well, as you know, it takes, a lie can spread around the world faster than the truth can put its shoes on. And that brings me to the last point. In Washington, D.C., there's a great book called This Town. And it's written by a journalist, I believe it was a Time magazine, might be Hasperin. And at the opening scene is when Tim Russert passed away. Meet the Press, right? Great. I'm going to put him down the middle type of, interviewer. But, somebody that I looked up to as a person he always did great interviews. The opening scene is his funeral and people are exchanging business cards behind the writer of the thing. And he just says, only in this town would people do that, would they social climb. There is a world of journalists who just want to fit in. And what I mean by that is they want to be able to go to the White House Correspondents' Dinner. So they will do what they are told and they will write the stories they are told and they will not challenge authority in any way because they want to fit in the culture. And that is a big problem that doesn't persist just outside of journalism. That goes into business. Why do certain CEOs not fight back about ESG? It's because they don't want to be at a cocktail party, where a member of the Kennedy family comes up to them in public and starts screaming at them about climate change. Like sometimes it's just that simple. They just want to be left alone. They want to fit in. And I've seen that happen before. I've been at events in New York where that has transpired. Correct.
Facebook hadn't been invented or was on the way to being invented, but only used for getting dates.
Yes.
But that, especially with the rise of Twitter, the way it was used prior to becoming X, that just only made things worse because people were not even questioning the veracity of first in line journalism. They were just tweeting it around or posting it on Facebook. So stories blew up that weren't even true at all. How do you get to the base of that?
Well, it's interesting because I think moving forward, what we've seen in this era has been a rise of citizen journalism and a lot of people who are willing to go out and actually do the work and ask the questions. And there are great publishers out there who are willing to allow that to happen. I've worked with Jeff Joseph over at Luckbox magazine and formerly Modern Trader magazine. And he's always had the mentality of, I don't care if it offends other people, go find the story. That was what I was taught. That was, so long as I was behaving ethically, then I had no problem with it. And I think that that's a rare breed. You and I had talked before about having a mob come for you. I've had a mob come for me. I'm alive. I'm fine. It wasn't it wasn't terrible, but I was kind of canceled right pre-Twitter, within the ecosystem in which I was operating. Now that I'm 42, I don't care, So for me, my conviction in finding out the story and getting to the who, what, where, when, why is not about somebody's truth or somebody, some other view of the world. I want to figure out what happened. I want to understand specifically why this event happened on this specific day. And typically what we find out is that the first reason that it may or may not have been told the reason that we were told something may have happened typically isn't the first reason. So it requires a lot of digging. It requires a lot of, learning subjects. It's a lot of work. It's not an easy business. And it's one of the reasons why I only write one long form piece every 2-3 months, because it's an exhausting process to track down a story and to track down a truth and to obtain the perspective that is necessary to write the story, and not just have it be a bunch of talking points that have been written by politicos in the basements of areas across Washington, D.C.
You've successfully married your approach to journalism with your degrees in economics and finance. Explain to me how you take that approach to finding the right story. You also write shorter pieces that end up in Monday mornings. Describe your process for finding the truth in the stories that you write. You've written some pretty interesting ones, which I want to get into later, but to hear your process. The
thing that really meshed all of this together for me was when I was at Hopkins, I was working on my thesis, and I was writing about doing literature reviews, analysis of what were the primary drivers of the financial crisis. And you universally can state that derivatives were mismanaged, and the derivatives crisis that we saw, that was tied obviously to the mortgage-backed securities and things along those lines. This was a serious issue, and I'm writing about it. I'm studying it. And meanwhile, while I'm doing that, I was working for an advocacy group, doing a lot of writing, ghostwriting, talking about the very things that I'm discussing. And one of our clients was a large financial institution that was involved in the trading of mortgage-backed securities and derivatives. And they were starting a grassroots campaign to try to convince the American public that they were not involved in the mortgage crisis. So I've got an executive team, and I've got my bosses telling me this organization was not involved in CDS and all of the mortgage problems. And then I'm doing my own independent academic work that clearly proves that this is incorrect. And I'm challenging my bosses. Now, ultimately, that led to my dismissal. But at the end of the day, it proves that a lot of the things that we hear typically you have to dig into. So I'm big on quantification. I have a math background. It's easy for me to tell stories about individual stocks, about whether they're undervalued, if they have good management, just from a handful of numbers. But one of the rules of everything that I do is you have to qualify everything. So qualification is extraordinarily important. And if you're not talking to, it's easy to go out and have somebody say, this is happening, this is a story, this is a trend, you should write about this. But if you're not getting on the phone and calling 5, 6, 7 people and finding out, is this an actual road that I should go down, then you're absolutely doing it wrong. That is a form of bias that is very, very dangerous. It's an anchoring bias where what you read recently, that must be the truth. And as we have seen in the last year and a half, particularly from a momentum perspective, read the headlines at CNBC, read the headlines, in some of these financial publications like Barron's. They're very good at calling the top. They're horrible at calling the bottom. And people pile in, retail people pile in when everything is very, very positive, and they sell it they buy high and they sell low. And the way that I look at this from a quantitative and qualitative perspective is that, by utilizing my knowledge of finance and really kind of telling the story through numbers and kind of dissecting this kind of inherent problem that the media has had, not just since the last 18 months, but I think since the world of finance has changed over the last 30 years. It's kind of been a personal mission and a desire from an ethical standpoint. And because I think I have a little bit of a different perspective. Economists are not journalists, and journalists are not economists. I'm one of the rare people, I think, who does this. It's an opportunity to really, help protect people and provide them the necessary tools that they have to feel safe in this environment. And it's told through numbers, and it's told through good old-fashioned storytelling.
How has finance changed over the last 30 years?
A lot of the things that people think are important aren't. It was interesting to watch a lot of people, for example, talk about the M2, and they're saying, well, the M2's just collapsed, to the lowest level since the 1930s. Well, Mr. Greenspan stopped paying attention to the M2 in 92, 93. But in addition to that, that is not liquidity in the market. The rules of liquidity have largely changed in the last 10 to 15 years. You're seeing a lot of capital that is moved through the global markets through the perspective of what Salomon Brothers understood back in the 1980s. And it's not just the central banks. It's not just, what the Federal Reserve is doing. There's shadow banking, there's private sector credit, there's collateral pools that exist that a lot of people wouldn't know existed unless they went and looked for it. And then in the rise of China, there's a significant amount of cross-border flow, capital flows that have impacted liquidity. And there's been some really great research around this over the last couple of years. Michael Howe wrote a great book on it called Capital Wars. We're basically showing that this world has really shifted post 2010 in terms of how this market has altered. It used to be a world built around financing new growth, and what Hal pointed out, 7 out of 8 new dollars that are created goes to refinancing debt. And that has created these cycles of central banks perpetually buying new assets, lots of fiscal growth, which is really just more debt in order to paper over existing debt. And that cycle seems to be where we are going to continue to head into the foreseeable future, barring some decision moving forward where they either allow assets to crash or we end up pricing out an entire generation of Americans from owning assets like housing.
So is that what you see as the end game? And the reason I'm asking that specifically is because I've been writing about debt at all levels of society for 20 years.
Yep.
And I keep thinking I sort of understand what's going on, but then they keep pulling new rabbits out of the hat, and then we go for another cycle, and we're going through another one right now.
Well, that's exactly what I think is going to possibly. I honestly do think this could happen in the next 48 hours. It's August, or it's late August. We have the Fed meeting in Jackson Hole. They're meeting with the ECB. They're meeting with the Bank of Japan. The Bank of Japan just changed its policies that could structurally alter demand for U.S. debt. So that 50 basis point move that should move the 10-year higher. I think we should be at 4.5 by now. I think we're in a slow kind of move toward the 5% level. And that structural issue involving the yield curve is going to be a major, major challenge in the next 24 months, maybe sooner. But with these big shifts that continue to happen, if you look at the playbook that has happened since 2012, it has been QE, 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 try to tighten, more QE, try to tighten, more QE. And a lot of people are betting on that the central bank is going to continue to tighten. But as you said, they always find a rabbit, and they did it in March with the regional banking crisis. They changed, the way that they provide capital for a lot of these banks. They effectively said, yeah, we'll take your worthless bonds and we'll give you capital at par value, which is insane. But they did it. And they said, well, it's not bailout and it's not quantitative easing. And everybody who understands the balance sheet is raising their hand saying, yeah, but you put the assets on the balance sheet. You put the assets on the balance sheet. That's easing. No, it's not easing. Well, then what happened? The market rallied. The market went up in March. And then the Central Bank of China comes out, eases on June 1st, and we have another massive 45-day momentum-driven rally. If we go back and we look, and you can do this, if you look back to 2008, there are a handful of things that really speak to how rigged and broken everything is. If you look at the biggest amount of insider buying, executives at companies buying their stocks, their own stocks, the strongest insider buying dollar to dollar ratio compared to selling. It's Lehman Brothers 2008, March 2009, August 2011, December 2015, December 2018, April 2020, and last October. What did all of those things involve? Massive fiscal and monetary policy easing projects. So that's one of the very few charts I even pay attention to anymore, because the moment that all of that insider buying picks up, it tells me something's coming. Something's coming big in the monetary or fiscal policy expansion. And that is going to end up driving equities higher. So I do think the end game here is you either have to let assets crash because you've priced out an entire generation of people. The Federal Reserve is structurally, and as is every central bank, fearful of deflation. Why? Because it happened during the Depression. We are basing a lot of our fiscal policy on events that transpired 95 years ago. On top of that, however, we have been in this period of inflation targeting since 1993, really understand how global finance has changed. This expansion of balance sheets, this inflation targeting that they have engaged in, which they say they officially didn't adopt it until 2012, but there's ample academic evidence from Robert Schiller, who was writing about how Larry Summers was discussing this back in the early 1990s. Americans would not allow their housing and their real wage or nominal wages to decline. They thought that would be a political liability for the Clinton administration. The idea that your house would be worth $200,000, but now it's worth $190,000 because deflation. Yeah, but everything else became more abundant and cheaper to buy, but your house went down and your wages went down. Now you could buy more, but you'd have to, as an American, understand how that works. Well, we don't teach people the benefits of deflation. There are benefits to deflation. It's by definition, it is being able to buy more for less. But they were so paranoid about this, and they believed that the Americans were stupid, right? That they said, well, we need to do something. And it's not just America, it's all around the world. We need to do something so that we can ensure that we don't get hit by these deflationary pockets. Well, the biggest deflationary pocket was 2008. And then their solution was, we'll print 5 times, which they did. And then 2020 came around and it became the mother of all printing. And I hate to say this, but I'm starting to believe it. I think the next crisis that they will use as justification to dramatically increase their balance sheet, as they did with COVID, I believe it'll be climate change. I believe they'll use climate change as an excuse to dramatically increase their balance sheets.
Yeah, I mean, politically, you can see it's moving that direction anyway. And it doesn't matter if you're a Democrat or a Republican, because that is the large narrative that supersedes both parties.
Correct.
Let's before we get into climate change too much, I want to talk about the Florida Republic.
Sure.
You sort of bailed out on the whole idea of moving to Florida. So describe that. That was an interesting conversation I had with you too. Yeah. We were talking about your journalism past, and your point was something like, you know what, I touched the hot stove. I got burnt. I'm not interested anymore.
Yeah.
I'd rather figure out a way to help people sort of check out and manage their own money properly, even if we have all these headwinds against us. So part of that is moving to Florida. So my first question is, why Florida?
Well, I lived in Chicago for a long time. I lived in DC. I lived in New York. I lived in a lot of very high tax places. I'm done with that. I want to enjoy the fruits of my labor. This is the 3rd largest economy in the U.S. It's very business friendly. No income tax. That's a really important thing. Forgive me, my dogs are barking in the background. Can you hear them?
No, I can't.
Okay, good. So as long as you can, we're good. In addition to what my other writing, I have 2 other things that I do a lot of work in. One is in agriculture and one's in renewable energy. So I live in a place, I have a little bit of a farm. We are in USDA zone 10. That's where you can grow year round. You don't have a planting season, which is great. This is a place that did not shut down during COVID. It takes a long time for the parasitic politics to kind of infect a stronghold like this. So, it's not about being conservative. It's not about being right wing. It's not being about Republican. It's just that this place for me geographically seemed like a really, ideal spot. I had family here just to be able to do the things that I wanted to do. There's some health issues involved in this as well, right? Like I have arthritis. Being in the cold doesn't help. But the idea of the Florida Republic began largely as a joke. Yeah, I started writing this as what would happen if America went away and this like place had to be created that we would be self-governing. I'm not talking about a secession movement. I'm not talking about a libertarian refuge. I'm not talking about Galt's Gulch and a Ayn Rand book. I wanted to make it funny, and I wanted to just point out, like in an ideal world, in a place where people can be, self-sufficient, we would, on the night of the election of the Florida Republic, we would put the Democrat in one boat on the Gulf side and the Republican on the East Coast, and then they would debate on the boat the night before, and then we would cut the electricity and push one boat to Tampico and the other boat up into the toward Africa, and then we would elect a golden retriever. And that would be our president, and that would be it. And it was just, it just became this kind of walking, kind of satire of the world. But then when we started to really think about it and we started to write it, it became more of this idea of a state of mind. And, the way that I think and the way that I think a lot of people should approach the markets is the same way that I hope that people would approach their life in this environment where it's very, very difficult at times to feel like you can actually put yourself first. It's not about, the libertarian issue of individualism. It's about, being able to, understand that, wealth is good. Wealth is what is going to be able to help you opt out of a lot of the things that are problematic. I want people to be able to embrace self-discovery. I want them to be financial independent. I want them to be present. I don't want them to be thinking too much about the world 5-6 years from now and to prioritize their health, their wealth, and themselves. And in the world that we operate right now, with all of the things that feel like we talked about the media kind of makes you feel like you're falling down a flight of stairs without any handrail to grab onto. The one thing I always want to remind people is that none of this bullshit that's going on in the world is their fault. A lot of people feel this kind of like collective guilt, and they didn't do any of that. So, we're just trying to focus heavily on, giving people the tools that are necessary to be successful in this market, and seeing things through the lens of momentum. Once you see and understand liquidity, insider buying, and momentum, you really can't unsee it. So when markets go negative, like they did on March 7th, for example, we got out of the market. I give away the indicator every day in postcards. We got out. And on March 7th, if you would have looked back through the news, you would not have seen anything about regional banking crisis. If you would have looked at February 21st when we went negative in 2020, you would have thought COVID wasn't a big deal, because that's what you were hearing from politicians. If you were to look at the momentum move that happened on August 10th of this year that went negative and we have just moved to cash, you would have thought, oh, maybe this has something to do with the seasonality. No, it's China and it's the bond market. So while all of this is going on, I'm just talking to people about what we're going to do when momentum goes green and when we have a major fiscal policy shift short term, which is probably coming soon. What we're going to buy, how we're going to trade it, and we're only focusing on the positive elements of momentum, not trying to short the market and using the periods of volatility, not to try to trade, but really to try to just take back time in our life to getting back to the other things that matter in addition to understanding the financial markets.
Recently, Bloomberg just released some research that they had done that showed that $1 trillion has fled Chicago, New York, and LA, the financial markets there, and ended up in places like Miami, Dallas, Nashville, all low tax areas. The most famous one, of course, is Citadel with Ken Griffin. He moved his headquarters down to Fisher Island, which is just south of South Beach. And just by virtue of doing that, I think he bought 5 estates or something.
Yes, he did.
and moved his executives in there. And just by virtue of doing that, Fisher Island became the most priciest neighborhood in the country, and maybe even the world. I'm not sure if
it's possible.
Yeah,
it's possible.
So
Yeah,
that trend seems to be at play. There's a lot of people that are like fed up with the weather, fed up with the crime and violence. They're fed up with the politics. They're fed up with the taxes, and then they end up in the Florida state of mind.
Yeah, and we left Chicago. We had crime in our neighborhood that when we bought our place, everything was fine, and then all of a sudden we started having random break-ins and shootings down the street. A young man that I met when lived around the corner. I used to go down and buy wine from this little bodega. He was a refugee from Iraq. He came over after the first Iraq war. The rest of his family came back over after the second Gulf War, and he moves all the way from Iraq to Chicago to get shot in the chest, in a robbery in a relatively safe neighborhood. And when that happened, I just looked at my wife and I said, I think we're done here. I'm not gonna do this. But no, you're absolutely right. But there is going to be a consequence of this, Addison, which is critical. Chicago's pension system is cooked. 80%, I believe 80% of all property taxes go to the pensions. They're trying to draw blood from a stone at this point, and they're not going to be able to do this. And it's going to be a big question 5-10 years from now. Is the United States government going to have to bail out some of these cities? And if that is the case, what is that going to look like? Because I think at some point you're going to see a lot of, I don't think it's going to be a secession movement, but I think it'll be a decentralization movement.
Well, I mean, the government itself, who's going to bail them out?
Just print more money.
Yeah. Well, this is one structural change, this shift of moving out of northern financial districts down into low tax southern districts. We called it eastbound and down. There are a number of others that you've written about, and I'm just using this as a segue to get into it. You had suggested that you only need to follow 4 trends over the next 10 years to make money. And it allows, by thinking of it in this way, it allows you to not worry about the news cycle or the more high pitched screaming that goes on news programs and the fights that people get in social media. And I'll just read them. You called them the 4 Ds. De-Americanization, dirigisme, which is a nice French word. You're going to have to explain that. Decarbonization and digitalization. You picked a lot of syllables to get your D's in there.
Yeah, you got to make sure you got to make them long. You want to have 5 or 6 of them. So de-Americanization is.
Well, actually, I wanted to start with that and bring up the BRICS because while we're speaking, the BRICS are meeting in South Africa, and that's Brazil, Russia, India, China, and South Africa, and they're having their 13th annual meeting. Which every time I hear their meeting, I laugh because BRICS was conceived as a marketing ploy by Goldman Sachs. And now those governments are getting together and taking the whole thing seriously. But during the meeting, Putin, who could not attend because there's an arrest warrant for him if he entered into South Africa, there were Interpol or somebody was meant to arrest him for his war crimes. So he did it. He chimed in by video, and he said that the BRICS, and I don't think this is actually true, but he maintained that the BRICS as a trading bloc of nations is now either equivalent to or larger than the G7 Western countries.
Correct. So by economic size and by population, what this new BRICS would look like would be sizable, but let's be very, very candid about what this would entail. It's not something that would happen overnight. A BRICS currency quickly supplanting the United States dollar is going to be very, very difficult to do very quickly. And there's multiple reasons for this, but the first one really starts back in the 70s when we created the American oil standard, which is the agreement that oil would be priced in dollars. The stability of the dollar was always kind of questioned moving into the Gulf War, the first one. And after 1991, so a lot of people are talking about what happens if China is, they price currency in yuan for oil instead of the US dollar. I'm not really worried about that at the moment. And the reason is two parts. One, it's still referenced in dollars. 80% of global trade in US dollars. The other 16%, whatever the currency is settled in, it is referenced to that. So people are looking at it, pricing it in yuan, but then they're turning around and saying, yes, but the yuan is worth 7.3 US dollars. So here's what the yuan figure would look like. What happened post 1991 was that we really got the world addicted on US dollar debt. That's the bigger problem. That's the challenge. And all of these nations that have been utilizing the dollar for global trade are going to have to wean themselves off of that and do that very quickly. It's not going to happen very quickly. China is the largest user of the US dollar. They use more of it than we do. So if that's the case, the thing that has to be broken, and it's going to be very difficult for them to do. We're going to talk about China in a moment, but China has a massive manufacturing base, but they bring our dollar in and they re-export it. China would love to export the yuan. They don't have that strength, and they don't have the seigniorage of their currency. And what I mean by that is, here's $100. It can buy $100, but it costs the U.S. government $4 to make it, right? They make the government makes money off of that. I mean, that's a big part of their ability to be successful. And back in 1912, or when Britain was, the heavy hitter at that time, at that point, the US dollar was basically traded less than Hungarian currency. It wasn't part of a big international flow. It took 30, 40, 50, 60, it took 35 years for that really to take off. I mean, that's post Bretton Woods. So it's going to take time.
Well, it took 35 years, 2 world wars, and
a depression. Right. And they still came out on top. So it's one of these things. China doesn't have that type of doesn't have that seigniorage. I have a very hard time that a lot of these nations are going to come together really quickly and agree. I think what a lot of these nations are looking for is for Janet Yellen, Jerome Powell to come to them and help them get access to the dollar swaps that have been the big tool post 2008. After 2008, the dollar swaps that we were engaging in order to help, protect certain countries that were struggling with debt, that became politicized. And it became a matter of whoever was in charge, they're the ones who get to decide who gets access to the dollar and who doesn't. And that should not have happened based on what we were accomplishing back in the early 90s by really getting the world addicted to dollar debt. We've put a lot of nations in a situation where they are looking to get away from that, especially in the wake of the last year after the dollar got very, very strong, and these countries were struggling because their local currencies were depreciating against the dollar, and they needed a lot of access to dollars in order to pay off that debt. So there's going to be a lot of this is not going to be something that's going to be very quick. This is going to take time. This is going to be a story of the decade.
One of the things they're discussing at the BRICS meeting is creating an alternative currency to the dollar that's backed by gold. It's been a pipe dream of gold bugs since 1971 that somebody would back another currency by gold, and then the idea is that capital would flow to that currency because it's backed in gold, and it would have the stability that gold gave the dollar for a number of years between 1944 and 1971.
Sure.
I think I agree with you that the governments of those countries all have differing agendas when they get set at the table. So I don't think that they will be able to pull together any kind of currency backed by gold at a negotiating table. What would be the U.S. or just even the global financial response to a currency that was backed by gold? I think it would cause further violence, further outbreaks. I do too. Of different regional wars. Yeah,
I think it creates a lot of pressing challenges. One of the things that is very difficult for to really kind of comprehend is in commodity-based currency systems. That's counter-cyclical, right? So the currency itself can and would be gamed by the amount of gold that is going to be in supply. I mean, that was one of the challenges of the gold standard itself, of China coming in and just redeeming in gold. So I have a hard time believing that if you trade this gold-backed currency that is backed by multiple central banks, am I going to be able to be, if in the event that my collateral is not delivered, or if my product is not delivered, and I have a claim on that, am I going to be able to go over and take that and say, hey, give me 700 ounces of gold? I highly doubt that's going to happen. So that can quickly lead to issues of trust within nations. The other element, I mean, how are they basing it? How are they auditing their gold reserves? What happens to a situation where Russia and China, as two massive producers of gold, that they could, by default, if we're basing it on what's in circulation, they could game it at any time they wanted to. They could pull as much of that stuff out of the ground and effectively drive down the cost of it. Meanwhile, you have fiat currencies, which are more cyclical, right? The expansion of debt, the expansion of credit creates new currency, creates growth. I think it's two very difficult theoretical currency systems that would be running that would try to counterbalance one another, and I think it creates a very unstable situation for everybody. The one problem, unfortunately, is that there wasn't a backstop for the Federal Reserve in 2008. So if we have another crisis, significant crisis, in what kind of reads to me, it sounds a little bit more of a mercantile style system more than it is a capitalist system. What happens in the event that system has a liquidity event, and who is the backstop, and who are the central bankers, and who is trusted? All of that trust takes generations to build.
The first of your 4 Ds is de-Americanization.
Mm-hmm.
The trends that we're talking about, they're in place, but you're looking. I guess you need to explain to me de-Americanization.
Yep.
I guess it's not hand in hand with the dollar, because the dollar
Right.
Operates as a reserve currency almost independently of anything that happens in America.
Yeah, so I think it's important to think more of it's not just a matter of dollars itself. You have to think about individual supply chains. You have to think about a nation that's looking a little bit more inward. You're seeing a lot more distrust with the G7 and with the West itself, and I think the American system. But the way that I look at it in terms of opportunity, it's really kind of built around the commodity flows that will pick up. This is less about a gold-backed system. This is more about the ability and willingness of nations to engage in trade with one another for the purposes of circumventing the dollar. And it doesn't necessarily mean that I'm focused heavily on the idea of trying to say that the dollar is going to be. Effectively, the dollar will be used less in trade. That's a very serious fact. You're going to continue to see less interest in the U.S. dollar, particularly from China. Japan has just given people a lot of opportunity to effectively walk away from U.S. bonds. I think that's really the core thing here. It's not necessarily the dollar itself; it's the debt. And who is going to own that debt, and what will that look like? And again, once I've said it will probably be the Federal Reserve and the American people who are stuck holding this currency that is going to continue to be debased throughout the future.
Yeah, demise of the dollar.
There you go. Easiest way to put it. But de-dollarization is a subset of the de-Americanization, the lack of the American influence in foreign policy.
Dirigisme, which is a hard word to say, but you'll have to explain that, because it's a French word that is akin to mercantilism in the English language.
It is economic fascism. It is the concept of government trying to do too much and the inability to do anything. we're at a big precipice that is we're crossing it right now, where the expansion of government into virtually everything, whether it's speech, whether it's what you can buy, whether it's where you can produce, this is going to be a major force through the next decade of whether or not individuals will push back on individual policies. It will shape public policy. If you look at these mandates that are around trying to force everyone to buy EVs by 2032, if you look at these policies that are in place that are it's almost like Calvin ball. If you remember Calvin and Hobbes, the game was, the rules were that there were no rules. The rules were that the rules could never be the same twice. And this is happening in public policy. So over in on the lines of Oregon and Nevada, they're telling native tribes that they are going to just drill on their land because they need the lithium. Meanwhile, down in Texas, they're trying to shut down new oil production because of a lizard. Up in they shut down the Keystone pipelines for the same reason that they were supposed to shut things down in Oregon. And it's just this pick and choose. They're picking winners and losers. It's very confusing. They have their finger on the pulse. It's not socialism. It's not communism. It's the opposite of free markets. It's effectively economic fascism in the cleanest form. And when you have a government that tries to do too much, you end up with a government that can do too little. We can talk about what happened in Maui with the fires. I still live 3 miles away from Fort Myers Beach. It still looks like it got hit by a hurricane last week. The government has all of these different rules in place about where you can build and how you can build. And you go out to California, people who want to become hairstylists need longer periods of training than people who become EMTs. These rules are completely insane, but they impact the economy in dramatic ways. So as we watch people, we look at politics and what is happening in this country. There is this group of people, Addison, that we'll talk about this within the world of EV, but we have a competence problem in the United States. We are not putting people who are experts in anything in charge of things that regulate our industry. And yes, you can make the arguments about the people who were regulators who were doing the revolving door with Goldman Sachs back in 2008. But how the hell do we not have anybody who really understands energy in charge of the Department of Energy? How do we have a person who has absolutely no understanding of how road infrastructure works in charge of our Department of Transportation? And on and on and on and on and on. The current administration, the average person who works in it has less than 2 years experience in the private sector. And it tells you everything that you need to know, because it's academics. It's a lot of people who are reimagining the world through the way that they believe it should be. And they're trying to force industry into a box. And the industry is doing its best, but you're getting to this point right now where a lot of people are just simply stating, you know what? I'm not going to drill in Texas. I'm going to sit on my oil wells, and you're going to beg me to drill in about 2 to 3 years when we start having a real serious energy crisis, because you sold all of our strategic petroleum reserve over the last couple of years for political purposes.
Yeah, to China, no less.
Well, of course. So it's just the finger on the pulse, and it's people telling people what to do. And I just say, when government spends a significant amount of money, and you could be pissed off that they're spending your tax money. One of the best things that you can do for yourself is just go out there and get it back, and do it through the markets.
Well, that's a probably good segue into decarbonization, because that is exactly one of the places where they have their fingers in everything.
Absolutely. It is, decarbonization, that, this concept, this construct is nothing new. This has kind of been a major trend for the better part of, 20 years. When they started to really empower the EPA, really started in the 90s, and that really started to impact our supply side economics here in the United States, and it's gotten worse. It's interesting, too, because we have done a great job reducing our emissions here in the United States. We've been really the leader in it globally, because we shifted to natural gas largely away from coal. We have found, revolutionary technologies that have the amount of plastic that was used in a water bottle 5-10 years ago that same plastic can now create 5 to 10 bottles. So the private business is actually doing a great job at this, and I would argue that the market solutions are the way to do it, but they keep putting their foot on the gas with the restrictions. They are not thinking strategically about what happens in the event that we don't have enough emissions reduction in place, the type of technology that is required. The big problem is scale. We'll talk about that in a minute. But this trend is going to continue to happen whether we want it to or not. And I really just think the best thing that people can do is just get in the game and play it from a momentum perspective, because what we have seen is that when momentum goes positive and there's a lot of easing, these stocks rally. And when momentum goes negative, they tank because they're all trading at outrageous multiples and people can't justify keeping their money in them. So, there's ways to trade it. There's ways to invest in it. From the long term, I really, really still do like the battery business. I'm a shareholder in a European battery company. And once again, if the government's going to continue to just keep pumping money out, the best thing that I can do is go back and get some of it back, because otherwise they're going to eat into my purchasing power over the next 10 to 15 years.
Well, they're going to do that anyway.
Yes, 100%.
Yeah. But let's just hit out the last D, which is digitalization. I want to get into that by, I have a piece of reader mail, which I was hoping that you had an opinion on.
Sure.
A gentleman named Carl said he went to a credit union and asked them how they were preparing to handle a digital coin produced by the Fed called FedNow. And the credit union said, we're not involved with that because we're a locally owned credit union. So his question is, how is it that the credit union is still going to be able to operate in a fiat world when the Fed has gone digital? And then he's worried about what the impact of the Fed coin is going to be on their ability to control inflation, and or what will be the policy or the process of switching over. Are they just going to ban cash altogether?
It's a lot to unpack. It's a lot in that question, really, right? It's tough because, from the perspective of FedNow as a tool, it is practical. It actually makes sense that it exists, because if I have a bank account at JP Morgan Chase and my wife has a bank account at Bank of America and she overdraws her account, I need to be able to get money into her account as soon as possible. There's no excuse that it should take 3 to 4 days for that to move. It's no excuse that it should take a weekend. These banks are capable of trading with one another overnight on a regular basis. Given the advancements in technology, it makes sense. Now, this is not competing with Venmo or Zen, Zelle, or Cash App, but it is a necessity. This is the challenge within government, and they're so far behind the times that this is why when I hear people say, well, they're going to do a CBDC, I'd think to myself, with what? With technology from 2016? I went and nearly took a job with the USDA. They were back in 2012. They were still using computers from 2003. They had an expert who did the wheat pricing. He didn't know how to use a computer. So, how are they suddenly going to become the leader in international currency flows when they basically have struggled with technology and they're so far behind? Whether it's in the cryptocurrency space or in the cash payment space, I think they're going to try to get there. But the other thing that I just note, so many people don't have banks in America. So many people don't have cell phones in America. How many people don't have smartphones? What are they going to do? Are they going to force people to go out and get a bank account? And if they force them to get a bank account, they're going to need an ID. Well, I thought we didn't need IDs for things. I thought we didn't need IDs to vote. So now they're going to have to go get are they going to supplement that now? It's too much bureaucracy for me to really think that it's going to be anything that is stable and successful. I think there's a lot of people who view it through the lens of like all of the potential things that they could potentially do tyrannically, but I think it's so far away. I think it's many, many years from now because of glitches and things along those lines. Imagine a world where they said CBDCs and then you have electricity go out in New York City, or you have energy blackouts. What are they going to do? What are you going to do? It's not going to work. So my view is more of the Modi camp, that they're going to commandeer the 100 and the 50s first. They did that in Europe already. We used to have $100,000 bills in the United States. They were used for interbank transactions. So that movement away from the big bills, I can see that absolutely happening. But as far as the concept of confiscating cash or making cash illegal, I think they're going to have a very difficult time doing that. I think it's going to be very, very hard for them to do it on a mass scale. They're going to have to go out and they're going to have to test it, and they're going to have to do it in local markets. And then by that point, you could see the unveiling process could take so long that there could be such massive backlash that those are the types of things that ultimately lead to dramatic political movements and political shifts in the future.
You did point out something that I believe right along is that, especially while studying the cryptocurrency market, that blockchain makes transactions more efficient. It cuts out middlemen, and it would help. It would help the banking system immensely if they were using blockchain on the back end.
100%. And you wouldn't need your back office at that point. It would expedite mortgage payments. It would expedite mortgage settlement. There's a lot of good things that can be done. But when you start to listen to some of these creepy people in the World Economic Forum, coming out and saying, well, we can track your carbon. Well, that's where, look, I know it, you've heard it, your audience has heard it. Wait until 30 million Americans who have no clue, who don't pay attention when they hear that.
Yeah.
I mean, that's the thing. It like the people who are in the know of this stuff, I kind of shrug it off because I say, yeah, wait until 140 million American voters hear that this guy up in, the mountains of Switzerland wants to track their carbon footprint. I think they're going to be in for a shock.
Yeah. Well, speaking of the World Economic Forum, they're one of the ones that are pushing the electric vehicles by 2032 is one of the targets I saw. But even that is kind of ridiculous. I was on a trip to Greenland last year, and there was a gentleman who was advising the Biden administration on some of the policies they were trying to develop. And one of the things we did was develop alternative technologies to carbon emissions, right? And one of the things we did is we went and visited with the executive of Blue Jay Mining, which is a company. They're an exploration company at the moment, but they're looking for lithium and titanium deposits on this island that's of a different volcanic makeup than the rest of Greenland. And right now they're just looking for the deposits. But it was an interesting discussion about the types of subsidies they're getting from governments all over the world just to go look for the stuff, because there's this political drive to develop, among other things, electronic vehicles.
Sure. And
what he was saying is that the current technology, this is just anecdotal to me, but he was saying that the current technology, most electronic vehicles takes 5 to 7 years to be carbon neutral.
Correct.
And the production of them is very carbon intensive.
Yes.
So it's like,
yes,
people are like, oh yeah. And then also you still have to generate the electricity somewhere.
Correct.
It's not going to come from wind turbines. It's not going to come from, water. So it's just kind of interesting that people get all fired up about the movement towards electronic vehicles in particular, just because that's a visible product that people are gobbling up in the marketplace. It boggles my mind that people get bought up or get caught up in the politics of it all so quickly and so easily.
So, the one thing that I will say, there's a lot of these crazy, papers that are out there about how they're going to get rid of everybody's not going to be able to eat meat, or we're only going to get to buy three pairs of clothes every year. That like these are these very intense statements that people say. Well, I look at this and I say, if you look at infrastructure spending in the United States, where did all the money go? Right? Because the roads still suck. The roads are still a mess. And then what you come to find out is, oh, there was a ton of money that was spent just on a bunch of people sitting around and consulting or reimagining capitalism, or money goes to the Brookings Institution. And all of this money is spent in this ecosystem of Washington and it never leaves. And that is part of the dirigism argument, right? The idea of all of this just consulting and nonsense and no applicable practical usage of the capital to actually solve the problem. And that is part of the bureaucracy. But if you look within the world of EV, you need over the next 10 years to meet these goals, you have to increase by a factor of 4 or more 14 different critical metals, including copper. And we've never doubled the amount of copper that we needed in a decade. We've never done it. So we have to do it by a factor of 3 or 4. You have to do the 4 times that. You have to do 10 times the amount of lithium. You have to do 10 times the amount of graphite. No, 16 times the graphite, 10 times the cobalt. A lot of the cobalt's coming out of the mines in Africa as well, and horrible human rights violations. So, I look at this and I say, that is the impossibility. That's where the challenge is going to be. And that's really where they're going to walk themselves into a significant problem. The other thing you just mentioned is the electricity has to come from somewhere. And the reality is, look, no one is serious about decarbonization unless we include nuclear in the story. And I'm talking vast amount of nuclear power. So that is where scale can be achieved, because to put this into perspective, it's a very simple. If you want to heat 8 million homes in the Northeast, you need either 1.3 square miles of nuclear, which is about the size of Central Park in New York. You could do about 8 square blocks of natural gas. That's the bang for the buck of natural gas. If you want to do it with solar, it's all of Manhattan Island. And if you want to do it with wind, it's all 5 boroughs of New York City. So that's the scale that is required. And that is the thing that people really can't comprehend. It's the sheer amount of scale required for these things to be implemented. So nuclear I can get on board with, but the sheer amount of wind turbines, the sheer amount of solar panels, which, by the way, aren't exactly the most environmentally friendly things in the world, as you have said. I think we kill more bald eagles with windmills than anything else. We have a lot of other challenges in the desert where they're doing all of this work with solar panels. Down here in Florida, if it gets over 95 degrees, the solar panels don't work. So once again, this is where I keep trying to argue lots of nuclear power, or just let us cut our emissions in half by focusing on natural gas. We've got a lot of it here.
Yeah, I've been a fan of nuclear for a while. I think maybe it was 2015 or something. I wrote a series called When Nuclear Goes Green. Mm-hmm. Because for a long time, like Stuart Brand was a famous, that got it invented or published the whole Earth catalog, was an anti-nuclear activist in the 70s. Right. And sometime in the mid 2000s, he came out full on in favor of nuclear energy, just because it's very clean, as long as we can figure out what to do with the waste. By the way, I just saw that they're starting to pump there's a 1.7 trillion gallons of contaminated water underneath Fukushima.
Perfect.
And they've been treating it since 2011, since the tsunami, but they're starting to leak it into the Pacific Ocean because they don't have anywhere else to put it.
Right.
And that's usually the public outcry, is what happens with the waste. But it is among the most efficient and clean energies that we as human beings know how to create. So I've been a proponent of nuclear for a number of years.
Yeah, it is fewer fatalities from nuclear than any other source of energy when you bring it down to the kilowatt hour. And the only reason that that is the case is because people fall off roofs when installing solar panels.
I don't know why that makes me laugh.
It's the absurdity of it. I mean, that's how safe it is. That's the choice, but we cannot bring ourselves to address this. And again, 3 Mile Island and Fukushima and Chernobyl obviously were.
Yeah, it weighs heavy on the public's mind. I
Yes.
grew up on the seacoast in New Hampshire, and there's a nuclear power plant there called Seabrook. And I remember growing up with protesters coming in droves from all over the country, lining up on the seacoast on the beaches, like in public spots where they could be seen. They would shut down the front gate to the plant all the time. And even as a kid, I was like anti-nuclear just because I would see these protests going on. And I would get, oh, nuclear is bad. And I would just believe that just because. I think a lot of the public is still of that mindset because of the big stories like 3 Mile Island. We still talk about 3 Mile Island, even though it happened in the 70s. And Fukushima obviously was much, much closer, but those things are like, it's, ingrained in the way we think about nuclear.
Absolutely.
Which actually makes it a good investment because usually hated investments are the best ones to get into.
That is true.
I want to talk about, this is a famous quote that we always use, but Ernest Hemingway once wrote, "The first panacea for a mismanaged nation is inflation of the currency. The second is war." I believe you just wrote about it recently. And since we're talking about Florida, he spent the latter part of his writing years in Key West. Let's talk about inflation first, because we're now we're all forced. I feel like the character in 1984 who has his eyes pinned open and he has to watch whatever's going on the screen. We're all forced to watch what the Fed does every 6 weeks when they meet, and what policy or what interest rate hike or non-hike they're going to come up with. Are they going to skip? Or are they going to start dropping? It's kind of painful, but you can see that it is the result of years and years of QE, and we could go all the way back to 1987 with dropping the interest rate anytime there's a crisis.
Absolutely.
And I've written and talked about that a lot, so I'm not going to repeat all the different crises that we did it during, but the result is inflation. And the alternative, another way of saying that is that the purchasing power of the currency that we use to buy stuff that we need loses value every year. And then we now have proxy wars. We've been fighting wars since World War II. Every couple of years. Some of them last longer than others, but we have hallmarks of what Hemingway called the mismanagement of government. How do you think about that in terms of investing? You're saying the best way to get back to them is get into the market and pick the right trends. But what can you can't do anything about the central bank inflating away your currency, and you can't do anything about the military industrial complex traipsing off all over the world trying to police people and change governments.
So I think the first thing to unpack is just kind of what the Fed is doing and how are they handling this. And there's this perception that no one wants to be Artie Burns from the 1970s. And that's kind of, Powell doesn't want to be put in a position where they have inflation come back. Burns spoke in Yugoslavia in 1979, and he was confronted about the waves of inflation in the 70s. And he said, well, what did you want me to do? They were fighting. They untethered the currency from gold. They were fighting the Vietnam War. They were increasing, fiscal policy to expand government payments for Americans in terms of Social Security. They increased COLA, all of these fiscal things. The Great Society was a thing. And I think that that's actually the thing that they are doing wrong. They have not stepped up and said directly to Congress, stop spending money, stop spending money, stop spending money. There's only 3 ways to fight inflation. Monetary policy, which is a blunt instrument, and that is raising interest rates, cutting the balance sheet, doing what you do with repo, but primarily interest rates. And that can be gamed and defeated because so long as companies still have the capacity to borrow, they will. Doesn't matter what interest rates will. They will take as much money as possible and borrow it and spend it. And consumers are doing the same thing. If you believe your currency is going to be worth less in the future, you're going to spend it now. And if you believe debt will be inflated away, you're going to take on more debt. You're seeing that happen right now. That goes until it can't anymore. The second way to do it is fiscally. And you can you can raise taxes. They don't want to do that. You can cut spending. They don't want to do that. But you are seeing a fiscal environment right now that is dominating and driving a lot of these challenges that we have. The Inflation Reduction Act clearly didn't reduce inflation. The infrastructure bill, a lot of that money is still going to be in the system, and it's going to continue to move through the system all through next year. And that's going to be a challenge for the Fed to fight, same way that it was for Burns. The third way you can do it is through supply side economics. You can expand your supply, but that has not been the story of the United States for the last 30 years, since really the expansion of the EPA. When Gore came in as vice president, and we saw a lot of movement on climate issues, and we saw a lot of issues around, supply side economics. It's not there. They have no supply side policy response. So their solution, time and time again, is let's use the blunt hammer of economic monetary policy, and that is what ends up breaking things that we still don't know could break. We didn't know that the regional banking crisis was going to happen, even though the regional banking crisis should have been recognized as a possibility by an intern at the Fed, just by looking at the balance sheet structure. We didn't know that the Fed was going to break the gilt. We didn't know that the Fed was going to create this big international emerging market crisis. Oh, it did, based on the late 90s. But we still don't know what else there is. And if the Fed would just simply say, hey, guys, why don't you just balance the budget? We can cut interest rates tomorrow. They're not going to do it. It's still driven by who I still think is in charge, Janet Yellen. She is just pure Keynesian to the bone, and she will print money and paper over debt until we are blue in the face. And that is going to be the real, end game here, in my view, is that they're just going to try to get inflation under control, and then they're going to try to increase the balance sheet, and that's going to bring our second wave of inflation.
You recently wrote, good job, Fed, you broke China.
Yeah.
Thematically, it fits with what you're talking about right now.
It's true. I mean, again, China is very, dependent on U.S. monetary policy. There's no doubt about that. And what happens with China in this situation is China has to scramble to go and, people who are Evergrande implodes. You have all of these banks that need to now go and find liquidity. They're going to go cross border. They're going to come to the United States, and they're going to be looking for money to paper over debt. At the same time that we have commercial real estate issues, we have issues involving small businesses. They're looking for money, but they're not looking at it at this rate. And there's just this this worsening pool of collateral out there that just kind of sinks, the way the capital markets operate, and that can lead to a lot of tension and unease in the bond market, and then obviously that spills over into the equity market. So I don't think we're anywhere near done this situation right now. I think this is going to last a couple of weeks. I'm going to see. I don't know what the policy response is going to be, but it could very well be something similar to what England did, which is England just turned right back around and said, you know what, we're going to keep raising interest rates, but we're going to start buying back assets. And now you can obviously see the reinflation story that they're dealing with, particularly on the things that matter: rent, food, housing. But the stuff that doesn't matter, technology and all these other costs, they just continue to decline. So I look at it, the Fed is completely backed into a corner. They broke the emerging market issues. We still have the commercial real estate issues coming down the line. It's eventually consumers are going to hit a wall. And at that point, that's probably where the pivot will come. But even then, I don't think we're done. I think we still have months and months and months and months, another 12 months before the full impact of plus 5% interest rates plays out.
Yeah. Well, JP Morgan, no, actually it was Morgan Stanley just released a report last week that said all of the pandemic era savings that the Americans had been holding on to is gone.
Correct.
And we're already, even before that happened, we were already at historic highs in consumer credit cards and loans and car loans and mortgages and student loans. We're already at historic levels in that.
But as long as Americans still have the capacity to borrow, they still will. And as long as businesses have the capacity to borrow, they still will. And if people have to paper over debt, they still will. That's the issue. And then that is where that will all hit a wall. And I don't know where that's going to be, but that's kind of the thing that's keeping me up at night, is what happens to a large number of Americans who have to make very, very, very difficult choices in terms of what they do and how they do it with their money. It's going to be, I don't think it's going to be 2008 level, but it certainly feels to me that it's going to have all of the nastiness of what we saw in the 2018 period before the Fed, again, started piling and cutting rates and buying assets again. And what happens with monetary policy is, and it's so simple, I don't understand why people don't talk about it more, that when the Federal Reserve and the central banks aim to shore up the economy and they use all of the tools that they have, all they end up doing is creating a spillover of liquidity into the equity markets. And there is a direct causal relationship between the holdings of all of the big global central banks and the performance of the MSCI global index, which is the equity markets. Money flows into equities when the central banks ease. And we've called it down to the day. I mean, I can go back last year and tell you exactly. I don't even need to look at the chart. It was January 28th last year. It was March 16th last year. It was July 19th. It was October 4th. It was January 3rd of this year. It was March 20th this year, and then again on June 1st. And every single one of those events had something to do with more liquidity spilling back into the system, especially the beginning of the year, right? The bottom of the liquidity cycle is most likely in that October, November, December range. All of these big central banks started to ease or pivot in some way. The Bank of England did it with the gilt. The United States Federal Reserve pivoted on its mortgage-backed security plans. That's why housing stocks are up 150% since October. That was it. That's the story. Bank of Japan eased, Bank of China eased, and then you start the year in a company like Carvana, which should be worthless based on its metrics. Stock goes from $4.50 to $18 in a 6 weeks, 5 weeks, 4 weeks, and then in June, positive momentum. Carvana companies at 17, it goes to 60. That's not because of good fundamentals. That's because liquidity creates short squeezes. That's because liquidity. These algorithms don't give a damn what the price to sales is of these stocks. So the way that I look at it is that's the game I'm going to play. The game I'm going to play is if they're going to, debase the currency and they're going to continue to print and they're going to ease and they're going to do this, I'm going to go in and I'm going to own the things that matter, which are energy, housing, food companies, things along those lines that will always have relatively stable demand. But on the other side, I'm going to speculate on the junk stocks. Because like clockwork, all this crap seems to rally every single time that there is a movement in central bank liquidity. That's it. It's the only game that I can play.
Yeah. Well, you can't do fundamentals anymore.
No.
They're like out the door.
Well, fundamentals matter, I think, on the things that matter. So energy names, housing names, if you do a value analysis, if you look at the companies with really good management and balance sheets and lack of a credit, subject themselves to a credit crisis, you can use what's known as the Altman Z-score to analyze that. You look at companies that are trading at low EV to EBIT instead of looking at earnings growth. They're in like those names right now are oil producers, natural gas players, pipeline companies. That stuff's not going away. It's not going away. So you're going to get good income out of those types of names. But the stuff that, is heavily the high short interest stocks, the Beyond Meats of the world, the Carvanas of the world, the charge points of the world. Just look at the charts. Look at the dates that I told you. The day that there was a policy shift, these things just go through the roof. And it's largely built on the back of algorithmic momentum trading that is combined with an ample amount of liquidity coming into the system. And that's it. And it's been that way since 2010.
All right,
it's a video
Garrett.
game. It's a video game.
Yeah.
End of rant.
End of rant. Well, Garrett, thanks for joining me on the Wiggin sessions. We're going to make sure that people have access to your writing at Monday morning. We'll post a link on the website and also send it out by email. We'll be writing about our conversation today we post on Monday and then the rest of the week. So we'll have ample opportunity to dig back into these ideas and divulge more.
Sounds good to me. Well, Addison, thank you so much for having me today. I really appreciate it. Thank you, everybody, for listening. I know that I can go on a little bit of a tangent from time to time, but hopefully you enjoyed it.
All right. Thanks, Garrett. We'll talk to you later.
Take care. Bye-bye.